Coming up on Market to Market, Congress hears tales from the front line in the China trade war. A diverse set of stakeholders seek common ground on the use of public land.
One level of projection,
and commodity market analysis with Sue Martin next.
Like a weekly or something like that.
Pioneer Hybrid International is a proud sponsor of Market to Market. Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.
Sukkot Manufacturing Company, providing equipment and buildings to store and condition grain to help farmers adjust to market swings. We build drying, moving, and storage equipment designed to preserve the quality of their crops. Sukkot Manufacturing, store now, profit later.
AccuSteel, offering fabric-covered buildings specifically designed for the cattle industry since 2001. The next generation of cattle buildings. Information at accusteel.com.
This is the Friday, February 28 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Paul Yeager. This week, there were renewed fears the coronavirus will adversely affect worldwide commerce, including commodity exports. 8 days ago, the Dow Jones and the S&P set record highs. At the close of business Friday, the Dow was down over 13%. Technically speaking, a correction. Well before coronavirus fears gripped the market, fourth quarter GDP moved up 2.4%. Orders for durable goods slipped 0.2%. Without the volatile transportation sector, durable goods rose 0.9%. A year-over-year view shows orders are down 2.3% and are flat when transportation is taken out. Economists place the blame for the drop in durable goods orders on President Trump's trade war with China. Despite a peace treaty, several sectors of the economy continue to suffer. Many farmers are still suffering from the loss of one of their major export markets. This week, a powerful House committee heard from those with boots on the ground.
The Ways and Means Committee will come to order.
The House Ways and Means Committee gavelled in a hearing over U.S.-China trade and competition this week. Those working directly in and dependent on China were assembled. The Phase 1 trade deal is part of the Trump administration's plan to improve trade relations between the two economic giants. One of the overlying issues has been terms for negotiations, tactics, and end goals of both nations. One panelist described it in the definition of the game of football.
And on one side of the field, we have the winners of the Super Bowl, and on the other side, we have the winners of the World Cup. They both think they're there to play football, but they have a very different concept of the way the game should be played. And if you try to picture how that game is going to play out, one team is going to get injured very badly because they're not expecting the physical contact. In this case, I think the American economy is like English football. We're not protected the way Chinese state-owned enterprises are. Chinese state-owned enterprises are like American football players.
Tim Stratford kept the analogy going. The former U.S. Trade Representative for China says China is all in the huddle together and knows what to do on each play.
So the whole system in China is designed to have everything coordinated to be very efficient, and it can work very well, but it's a fundamental disconnect. And so we really have to look at, if China's not willing to change their system because they think it's working well, how does a soccer team play against an American football team? And that's the kind of fundamental rethink we have to go through.
Minnesota producer Tim Defoe told the committee this trade war has decimated farmers across the U.S.
The trade war has created a vicious cycle on farms like mine. This cycle starts with low commodity prices that we've seen over the last 2+ years. So when prices are low and only going lower, a farmer is left with two bad choices. Lose money by selling low on or hold on to the crop that he has in hopes that the price will improve. In either instance, your profits suffer.
President Trump's 2017 presidential proclamation shrinking the size of Bears Ears and the Grand Staircase Escalante National Monuments was implemented in early February. The move opened the land outside those areas to, among other things, oil and gas exploration. The use of federal lands is largely controlled by the Bureau of Land Management. While the ways territory is used has caused controversy, there is a place where a group of diverse stakeholders has found common ground. Josh Bittner has more in our cover story.
Since its birth in the Old West era, farming and ranching have been tied to Grand Junction's economy. Now the largest metro area on Colorado's western slope, recent decades have seen the region's picturesque landscapes attract a new wave of stakeholders.
One of the challenges in the West right now is finding common ground between livestock producers and agriculturalists and outdoor recreation people.
Typically running over 500 head of cattle on 12,000 acres of city-owned land, Janie Van Winkle and her husband Howard are accustomed to sharing resources and dealing with adversity. Drought in recent years forced them to sell off around 20% of their herd. While they rebuild, a much-anticipated downhill bike trail has broken ground nearby and will eventually cut through their ranch.
This particular part of Colorado has been a pretty underappreciated part of the state for a long time.
George Gotchis is general manager of Over the Edge Sports in nearby Fruita, which has become a mountain biking mecca. The area boasts hundreds of miles of single-track trails initially constructed on public land by volunteers, led by the Colorado Plateau Mountain Bike Trail Association, or COP-MOBA. The 30-year-old nonprofit has 5 chapters and roughly 500 members. In 2016, the group's $1.6 million Palisade Plunge Trail proposal was given the go-ahead by state government, though no funds were allocated. COP-MOBA president Scott Winan says it's not uncommon for a new trail to take a decade from concept to completion, and cites responsible partnerships with federal, county, city, and other community partners.
To build a mountain bike trail, we have to do a bunch of environmental studies, archaeological studies. It takes a lot of time, takes a lot of money, thousands and thousands and thousands of dollars.
Initial trail plans would have sliced through the heart of the Van Winkles' lease with the city of Grand Junction. The ranchers were concerned that excess trash, trespassing, and habitat disruption would be a problem. Despite some missed opportunities early on, all sides were eventually able to come to the table, mend fences, and reach a consensus.
They're going to cut across 2 corners of that property, and that'll work for us, and they're comfortable with it too.
The trailhead will drop in atop scenic Grand Mesa, considered the largest flat-top mountain in the world at over 11,000 feet, and end 32 miles below in the town of Palisade.
And then down on the other side of that ridge and drop.
Some local business owners estimate trail users will generate a $2.5 million annual windfall for the region's economy.
It's an epic ride, once-in-a-lifetime opportunity is what I'm told. I'm not a bicyclist.
COP-MOBA and others stress their eye-opening multi-year discourse has helped community building between ranchers and cyclists.
We both love the land. We use it slightly differently. So that's probably bound to bring some differences of opinion too. So.
And the Van Winkles agree, even if sometimes it might be a tough pill for them to swallow.
In my opinion, it's the mountain that loses. All of us who live in the Grand Junction in the valley, this is a place you can look up to and know that it's pristine and it's special. And I think it changes the flavor.
All manner of activity on western public lands, whether biking, grazing, hunting, or mining, to name a few, fall under the purview of the U.S. Bureau of Land Management. Of the more than 245 million acres overseen by the federal agency, about 13% of the nation's land, over 8 million of those acres are in Colorado. Grazing permits on public land are administered by the BLM and the U.S. Forest Service. And federal numbers reveal livestock foraging activities generate almost $150 million annually in Colorado.
You expect that you're going to see livestock grazing in those same areas, and so I think a lot of the bicyclists realized that a lot of their trails actually came from cattle walking through this area. And somebody decided to ride a bike on it, and eventually it became a big sport and the BLM adopted those trails.
Colin Ewing is the National Conservation Area Manager for nearby McInnes Canyons.
Some of these lands are just too dry or too rugged to make it make sense for farming, so they were never homesteaded, and they ended up being managed by the Bureau of Land Management for multiple uses.
21 grazing allotments sit among the nearly 300 miles of trail and river access that bring 250,000 visitors per year to McInnes Canyons.
You're seeing that a lot in the West now, ranching and mining towns that are still ranching and mining towns, but also are inviting tourism into their economy.
One of the BLM's biggest challenges is accommodating multiple uses of terrain owned by all Americans. In some cases, that necessity has become the mother of invention.
So this is a bicycle cattle guard, so that the bicyclists don't have to get off their bike to open the gate, and so the gates don't get left open, so the cow stays in the pasture and everybody has a good time.
Many ranchers employ rotational grazing practices to regenerate pasture, but the Van Winkels say high visitor turnover can quickly degrade shared ground and leave regulars to blame.
We're an easy target, but in reality, it's all of the uses, and we have to figure out how we're going to make that all work together.
And toward that end, this year Van Winkle began serving as president of the Colorado Cattlemen's Association and could be asked to weigh in on similar issues across the state.
We were able to come up with a compromise, and I think that's really important no matter what we're talking about. Just understanding each other, that's a really important piece.
For Market to Market, I'm Josh Bittner.
Next, the Market to Market report.
The coronavirus dominated the commodity markets, leaving many traders seeing red and shifting to a risk-off stance. For the week, May wheat lost 27 cents and the nearby corn contract sank 13 cents. The fact the May soybean contract lost only 6 cents fails to show the pressure it was under from good weather and a fast harvest in South America. May meal was a winner, gaining $10.80 per ton. May cotton plunged $7.51 per hundredweight. Over the dairy parlor, March Class 3 milk futures lost 31 cents. The livestock sector took it on the chin. April cattle slashed $10.67. April feeder shed $9.40, and the April lean hog contract cut $4.75. In the currency markets, the U.S. dollar index dove 110 ticks. April crude hit 4-year lows, falling $8.44 per barrel, a 15% drop. COMEX gold tumbled $61.30 per ounce, and the Goldman Sachs commodity index plummeted almost 42 points to finish at $358.60. Joining us now to offer insight on these other trends is one of our regular market analysts, Sue Martin. Hello, Sue.
Hello there.
All right, Sue, so we gave you the cents proportions of some of those commodity markets. Let me give you some of the cents. Let me give you the percents. Goldman Sachs, 10%. Natural gas, 12%. Crude oil, 16%. Cotton, 11%. That's just a week. Those are the negative headlines. But we now have to figure out, in this question that we have from Lexi to start our discussion, she sent it to us via Twitter. She's asking, are the markets using the coronavirus as an excuse to correct themselves for the overvalued, overbought values?
Well, I would have to say that when I look at, for example, cotton, I felt that cotton had gotten into prices that one should be doing some hedging or making some cash sales. So in light of that, yes, that probably would say the market should have been in a correction. I look at wheat, and many times by the 13th of February, wheat puts a high in and corrects back, normally in a seasonal pattern, all the way into late March or early April. And you look at corn, and its tendency from mid-month of February is to chop around and work lower into March, while soybeans tend to find strength and rally into what I call the commodity classic rally. So, you know, we'll see, but I think what more than anything coronavirus has done, it's added emotion. And it's been like a risk-off affair for those who are in stocks and portfolios, 401ks and different things, trying to find a place to protect or park money. In the meantime, global investors or whatever are parking money in the U.S., going into T-bonds, gold, silver, although by the end of this week, gold and silver were totally on their face. Silver over $1.20 down or so, and gold $73 an ounce lower. Platinum, or not platinum, but palladium was the one that stood out today. It was very interesting because palladium's been in a major bull market, and it's had many days of limit up moves. And today it was like Katie by the door, could we just get out fast enough? And so I think when you look at money coming in, it's gone into the US dollar. I've been told even Bitcoin, some of it's going into Bitcoin. I don't know if I'd do that one, but that's where things are going for a safe haven. But you're seeing a lot of money being printed to try by China and, you know, other countries, but especially China, to kind of try to cushion the slide of their economy at this time. The one thing we have to keep in mind is China in the last decade has accounted for 60% of the growth in debt. They still only account for 8% of the global debt, so they're still pretty low when you think of it that way. But when you look at how much growth in debt they were seeing, and then they have this hit, you know, when 70% of their people are working and the other 30% can't, that means there's factories not running.
Right.
And they can't get their exports. And I believe I seen where the province of Hubei, where Wuhan is, accounts for like 80%, I believe, of exports and maybe 90% of the GDP. It's a major epicenter of the country.
All right, so that all being said, let's talk about some commodity markets if we need to buy or sell. Wheat, are we making sales? Are we buying right now?
Well, wheat's had a pretty good little correction. I would like to see it get a little bit of a corrective bounce in here in March, and I think it will. The one thing that's happening in wheat is, first off, we go to weather. The weather is beautiful. Our weather sources that we use that hit the weather to a T last year are calling, and they were in January, saying that we were going to see a warmer than normal spring, earlier than normal, that March would start being above normal in temperatures. And at first they were thinking wet, but then they started to turn more dry. And it's supposed to be that way all the way into late July. And so you're looking, unlike last year, where we had plentiful rainfall and we had cooler temps. We didn't really have the heat. This year, we're going to be drier with heat. So that's the difference. That brings that wheat out of dormancy earlier than normal, which means cattle have to move off of wheat pastures into feedlots or someplace. And then the other thing is that if that wheat comes out of dormancy earlier, okay, what happens? Do you get hit by late March with a frost freeze? April, so many times they're in April. The trade will be very cognizant for wheat now to watch the weather going forward.
Okay. Hold that thought again on wheat, but does that tie anything at all with corn? Because corn and wheat have been moving in together. Early planting is what we talked about last week as a possibility. Do you see the same thing in corn?
Yes, yes. In fact, I watched the YouTube's videos of Sean's presentation or conversation, and I couldn't disagree with him on hardly anything. I thought that he gave an extremely good outlook last week. And I have to agree that I think when you look at corn, I think one, we're going, and this will be a little negative at first, if you're getting more, better weather to get in and plant earlier, which God knows we have farmers who so need this.
They still need to finish harvest in some areas too.
Exactly. And so, for these areas, it's going to be a godsend and a blessing. But it also tends to be a little bit softer towards market price. It means that you're going to have the ability to probably draw more acres. Corn still dollars up better per acre than soybeans. So if you have weather permitting, that old saying, farmers love to plant corn.
They do, but that carryout is such a concern for so many people.
And it's going to grow if that is the case.
Yeah.
So your first aspect will probably be a little bit of a negative attitude. And then the next aspect is going to be, oh, wait a minute. We went from really wet subsoil moisture, till now all of a sudden, geez, we're warmer and we're drier. And then there's going to start to be a concern, and the markets are going to start to carry. And they're going to start to add weather premium in. But the good thing is, about planting earlier, you get hopefully your crop in early enough that the pollination makes it before your hottest part of the summer.
So what gets added to corn acres, will that be subtracted from soybean acres?
A lot of it, yes.
So does that impact soybeans getting us out of this rut that we're in?
Well, beans this week came down to a trend line that has held all the lows since August 5th. And we bounced from it. But we've spent about 4 days in a little congestion here. So many, and your 20-day average is just like right on top of us. So it's like we're getting tight. So I suspect this next week we're going to come out of here. The thing is about beans is everybody's got this thought process that China's going to waltz in and buy a lot of beans. But you also have Brazil in harvest. It's hard to believe that. You know, China's in the process of getting its ports back to opening up and getting stuff moved. And soy meal is now taking leadership away from soybean oil. And that is a blessing for soybean bulls because soybean meal always gives you a much better holding base to the bean market.
So you mentioned cotton right off the top, but that had a major drop this week. Is that all tied mostly to global GDP, corrections there, demand? Is that all China related?
I think so.
Yeah.
You know, China utilizes a lot of cotton for making clothes and what have you. Cotton is also an oil seed. And so I think that that's one area where, yes, I think cotton did bite a bullet because of the coronavirus.
Let's get to the livestock quick here. Are we oversold in cattle?
God, we hope so. You know, I mean, that market has just been treacherous. I always thought we would see a break in cattle off of a January high this year. And we would be counter to what we were last year, and we'd find lows about where we found highs last year. Because there are so many cattle lighter weights in the feedlots, because, you know, it was hard getting wheat in last fall, I think that that's been one of the things playing a hand here and a detriment to the cattle market. The packer has taken advantage of it. We have plentiful supplies in the cold storage of all meats, but beef may be a little less than a year ago. But the key is that when you have a coronavirus situation going on, like with China and what have you, all of a sudden it's like beef is like the last thing on the shelf to have. Pork and poultry are the two biggies that you need, that people will use and go to. Beef is sort of like the luxury item or whatever in some of these countries. That having been said, I look at in the U.S., and of course, you know, Monday it was all about China and Germany and Pakistan and Italy and Afghanistan, and of course some of those places don't eat beef, but so it was worrisome about that. And then of course the news of the first person that really hadn't been anywhere.
Kind of threw the market. That really sent us in a whole tailspin.
Yes, it did.
On
That
Thursday.
kind of turned around and just tanked us because all of a sudden the first thing that comes to mind is, one, it's on a coast, so a heavier populated area, and God forbid if we hear it on the other side. But that immediately brings to mind that people become protectionistic. They don't tend to go to restaurants. They stay away where there's a lot of people.
All right, and I got to get your last best 30 seconds on the hog market too, because they also had a tough week.
You know, I can never say anything in 30 seconds.
I know. We just try.
Okay, the hog market, I'm just going to say the June hog futures, I think, have seen their lows. I think they've seen it here in February. That doesn't mean you can't come down and kind of play with it, but I think hogs are going to be okay in the end. But we certainly have a lot of product, a lot of bellies, 57% more bellies than the 5-year average.
Oh yeah, 32% year over year. So yeah, big year in bellies.
Huge. And yet I thought Chinese love bacon. So
do we.
I don't know. You know, bacon's good on everything.
It is.
So
All right.
I think the hog market has seen its lows in the summer months. I'm not too keen on being up front.
All right. We're being upfront with you and saying thank you, Sue.
Thank Thank you.
All right, Sue Martin, our analyst tonight, thank you so much for joining us here on the broadcast portion of Market to Market. But we will keep this conversation going on Market Plus, where we'll answer more of your questions. You can find it on our website at markettomarket.org, or as Sue mentioned, on YouTube as well. A reminder, many PBS stations are in fundraising mode. Please consider supporting your local station that carries Market to Market. You'll be investing in the news reporting and timely market analysis you trust. Join us again next week when we'll explore further effects of the coronavirus on the commodity market. So until then, thanks for watching and have a great week.
Market to Market is a production of Iowa PBS, which is solely responsible for its content. Pioneer Hybrid International is a proud sponsor of Market to Market. Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.
Sukkot Manufacturing Company, providing equipment and buildings to store and condition grain to help farmers adjust to market swings. We build drying, moving, and storage equipment designed to preserve the quality of their crops. Sukkot Manufacturing, store now, profit later.
AccuSteel, offering fabric-covered buildings specifically designed for the cattle industry since 2001. The next generation of cattle buildings. Information at accusteel.com.